Hi, this is Peggy from WAR. Today our guest is Kiran Manjunath from the Innovation and Emerging Technology team at Ontario Teacher Pension Plan. So thank you, Kiran, for being with us, and thank you for answering the survey. That's great to get your insight. So let's dig in now in what are your thoughts in terms of new normal in financial services. So first question. What are the major lasting impacts that you believe COVID-19 will have on the financial services industry?
Definitely. First of all, before I start answering the question, thank you very much. I'm happy to be part of this. I've seen other videos and done the survey. I'm also very curious about what the results will be. But let me jump into the response right now. So the new normal in finance, that's a very exciting topic. I think one of the major things will be, predicting the next pandemic, or even if there's another wave, that will be high on the industry's radar for a variety of reasons. Having said that, no two pandemics might have the same symptoms, or in other words, would require the pandemics would require different methods or solutions to control the spreading and impact. So this is something that I think many companies, including financial services industry, will invest into to understand how to predict these kind of situations in the future, not just traditional recessions or financial crisis and such. So that's probably at the more macro level. Now, if I have to go into the banks, I think the lenders will have to now figure out new underwriting models that will factor in risk from pandemics, both for personal and business lending. The central bank interest rates are again at a very low rate and might remain that way for a very long time. So deposits from GIC, certificates of deposits, won't be attractive investments for individuals right now. Banks will probably have to look for other sources of cost-effective funding for loans. And also losses from default loans, both personal and business, will probably rise. The magnitude of the impact is still unknown because most countries have provided social assistance to their people and businesses, including payment deferrals. So once the government assistance tapers or is reduced, will people have the capacity to start repaying right away? We'll need to see that.
The lending is really a big thing. I think we're all looking at the industry to see how they're going to be able to deal with that, with low interest rate on one end, but more risk on the other end. So how do you reconcile that? So you were talking about government. In terms of regulations, what do you see might be coming upon us due to the new normal?
At the very least, I would expect the existing legislations and policies to be updated incrementally, if not transformationally. So the requirements for capital ratios might shift higher. Thanks to the financial crisis that happened in 2008, 2009, the ratios were mandated, and that has helped reduce the risk of liquidity crisis in this crisis. So it's been helpful, but at the same time, the U.S. policymakers and U.S. banks, their rates or their ratios are pretty low at this point. They've had a very long period of economic growth, so the capital provisions have gone low. So that is a risk. I think the policy makers in the U.S. will have to revisit this hopefully very soon. And then
that makes so much sense, and it's a great transition as well in terms of global stability, and what do you see in terms of the new financial order? Because all of these parameters, the fact that we have so much debt now, way less room to maneuver for the next wave, if there is a next wave, hopefully not. China, US, all of that. What do you see for this new global financial stability or new order?
I think you're right. There are many things going on. The COVID-19 crisis is still on. If not a crisis, at least the pandemic hasn't gone away. We're in the midst of anti-racism protests. There's trade war tensions between U.S. and China. There's also the U.S. elections this later on this year. So there's a lot to factor in. Uh, but however, the economic setbacks have been very big due to the pandemic. Regardless of the other reasons. Uh, Unfortunately, I think there will be a bigger gap between the rich and poor because of this pandemic and the economic outcomes from this. So, uh, how the governments have responded to this crisis is with economic assistance, which is great. But the government spending has gone really high, and how they will reduce their debt and become more fiscally disciplined will be very important going forward. Hopefully, not leave a lot of debt on future generations, and not following what is happening in Japan in terms of debt and their constant growth concerns. Hopefully, the national debt will be in balance or will be restrained going forward.
Yeah, that's going to be a challenge with the room to maneuver for the state, I think. Going back to micro, so in terms of resetting competitive positioning, so what type of organizations in the financial industry do you believe will be winning, and which one might be losing actually?
Yeah, at the surface level, I think asset managers and investors who have capital or cash to invest would have a great advantage at this time, mainly because the valuations for both private and public companies had gone down or have gone down or have taken a dip. So this can be a bit of an advantage. But broadly speaking, I think organizations that have genuinely helped their clients and employees to the best extent possible will probably be more stronger and resilient coming out of this crisis. And non-traditional financial institutions and large tech companies continue to make a dent, and the size is growing. So, for example, in recent months, Square has had more than $1 billion in direct deposits from their clients' stimulus checks or tax refunds, which would have traditionally gone to the banks. So these tech companies know how to become part of the solution very quickly and in a very nimble manner, compared to larger organizations or companies that are focused on traditional banking.
Yeah. So talking about traditional banking, where do you see these guys going? Their digital transformation agenda, you know the space extremely well. What's in your crystal ball?
I wish I had a crystal ball, but yes, I will use my sense of imagination and some experience from the past. I think banks will traditionally, or rather, they've traditionally relied on personal and business banking in the past, especially in Canada, for stable growth and incomes. But I think capital markets will probably be their next focus, or their focus will deepen on capital markets, because the culture within capital markets within banks is known to be more nimble, more responsive, and more innovative as well. So they probably rely on their capital markets teams to respond faster and get things going much faster for growth and other opportunities. They might also consider some acquisition opportunities within or outside of Canada for growth. But that also depends on their risk appetite, given that their loan loss provisions are significant and they don't know where the bottom is yet. So will they be prepared to make an acquisition is a question.
That's interesting, the acquisition topic, because there was a lot of talk maybe a month ago in the Financial Times that banks like BMO and TD might be actually aggressively acquire financial institution in the US. So we'll see how these things go. You know, it's so difficult for middle-sized banks to transform digitally. It's very expensive for them. So the idea of merger makes a lot of sense. You know?
Yeah, and I think to your point about digital transformation, this is a great opportunity for banks, right? Because now they need e-signatures and and clients need digital payments more than ever. So this is a great opportunity both for banks and for clients to go digital, and that, the adoption levels might be much higher, which will help the banks, I think.
I think that's the incentive they needed, of a motivation to
Yeah,
actually accelerate this digital transformation we've been hearing about for 10 years. Yeah.
exactly.
So, changing topics. So, for
Yeah.
you, what was the impact of COVID? Did you change bad habits for good habits, or at least old for new habits?
Yeah, habits are always hard to implement and hard to get rid of. Uh, so what I've been trying to do, and the COVID situation has helped me, is to stay more conscious about my what I'm doing, what my thoughts are, etc. So I'd started some yogic practices before the COVID situation. So those practices have helped me sail through this,
Mhm.
and I've been fortunate enough to not get impacted as much as some other people during this crisis. So I think using this time to reflect internally and becoming more conscious has really helped me.
That's amazing, and I hope more people do that. Actually, I started a daily yoga practice
Yeah.
as well. So we're gonna be able to roll our yoga mats together when everything is finished.
Yeah, I was excited to read about it, and I will certainly reconnect with you on that.
That's great. Well, thank you so much, Kiran, for your thoughts. That was very insightful. I knew that it would be thought-provoking for me and for the people who are going to watch the video. So for the people who are watching the video, please answer the survey. Maybe you'll do a video like Kiran. And Kiran, thank you again so much, from space. Thank you for your insight. That was great to have you.
Nice to meet you here in space, and I was very happy to do this.
Thank you. Bye-bye.